Next on stage is Luke Creagh. Luke is the Managing Director of Banda Limited, where he's steering the company through a dynamic phase of growth and operational transformation. Prior to joining Banda, he served as Chief Operating Officer at Northern Star Resources and has over 20 years of experience in the mining sector. Thank you, Luke.
Thanks, Tim. Good morning, everyone. Shout out to Canaccord as a major sponsor, and once again, a massive thanks to Diggers and Dealers for the opportunity to present, because the Banda story, it's been a pretty fun one for the last 3 years. It's been stressful at times as well, no doubt, but the next phase of growth is what we're really exciting for. And that's the theme of this presentation is we're getting to the start of our journey. We've done a lot of work to get to a critical mass stage where we can start growing the company. And this next stage is going to be where we really have a lot of fun and create a lot of value. So before we get into the detail though, what does it look like from a macro perspective? So this is the land package that's always sort of sat in Banda, but it has had a checkered history over the past 20 years. And the critical, I guess, issue that it's always had has been massively undercapitalised. So when you look at the belts that we've got, so this is a 140 kilometre kind of radius through there. These belts through here, you've got the Zuleika Shear, the Ida Fault. So they are huge regional deep tapping structures known to host high-grade gold. From all the way down here, Frog's Legs up this belt, that's about a 10 million net ounce system. So these are not small systems. But because of the undercapitalised nature and the focus on open pits, everyone's only ever looked for surface gold. So when we changed the strategy 3 years ago to look for underground, you fast forward, with very little capital, very little drilling, we've found 2 undergrounds, got them up and running. But really there's whole trends that we have to unlock here. And we've got 7 major mineralised trends, and the top 100 metres has been peppered and shown a lot of gold. And below that 100 metres, there's less than 5% of the drill holes. And that's really the next phase of what we're doing. And it's not just from sort of, I guess, the size perspective, like the corporate capability that we've been working on. So we've got a great board set up now, all the disciplines covered. We've got a great management team, fully engaged. So from a people perspective, we're really starting to get all sort of bases covered, and we've got the ability to leverage. So we've got a corporate team now that can not just run 1 or 2 operations. We can start building off this without really adding to corporate costs. And then from a balance sheet perspective, we've never actually been stronger as a company. So if I think back 12 months ago, it was actually pretty stressful. So we had 1 underground going. We started off with 26 million in cash, as you can see, and we had to start Sandking, which we did in August, and it was a self-funded ramp up of our 2nd underground, plus we wanted to do some drilling. So, and you think back there, like it's hard to remember even 12 months ago, $3,500 gold price. That seemed pretty bloody good back then. Over the year, obviously in the back of good gold price and executing on that plan, we actually grew cash to 84.2. And the exciting thing about that was we actually did that after spending 124 million back into the business, both in capital and ramping up that 2nd underground, as well as the exploration, getting our eye in on different deposits. And in addition to that, we've put in a $50 million revolving credit facility just to start right-sizing the balance sheet. But really getting this balance sheet and critical mass capability is what I talk about getting to the start, because finally we have ability to deploy resources and funds into sort of that next phase. And we haven't been idle over this period. So like we haven't sort of had a lot of money to spend on additional things, but we have got our eye in on these other systems. So we've done a lot of drill testing, a lot of boots on ground geology work. And really the second half of the presentation is about sort of accelerating that from sort of what we know now to really getting a lot more information. From a guidance perspective, so when you look back over the 3 years, we've grown sort of, nearly 40% year on year for 2 years. And then this year represents a 60% jump. So that's all organically growing. And that's done, as rapidly as you can get, probably because we had to more than what we wanted to, but it points to the prospectivity of the belt. When you start drilling these deposits, start trying to understand them on a bigger scale, you start seeing what it actually means. And when you're talking about numbers, that's 48,000 ounces. That's about 140 mil revenue at the gold price there. And then when you're talking here, we're talking 750 mil revenue. So that's what I talk about, right-sizing the balance sheet. But the other thing that we start noticing is this was single asset, and we're finally into 2 undergrounds this year. And what we've done is we've capped out our mill capacity. So we've been doing upgrades to the mill to get it as best we can. we're seeing sort of natural limits to what that mill is. So really, it's about this next phase is going through the next, sort of looking at the next growth option of expanding the mill capacity to 3 million tonne. So that's what we're really starting to see is the ability to overmine the mill, but then the ability to bring in additional resources on top of that. So it is exciting. Going from single asset to double asset doesn't just half your risk. It's a huge benefit to the business. And then the other side corporately, which something I feel can get overlooked, especially when in the smaller companies, the sustainability piece, just the investment we're putting back into that to just improve safety, improve standards, reinvest into the business to make that right size. Getting sustainability, our environmental management, we're starting the progressive rehab, putting a lot of funds into that, which was previously ignored. So it's not an optional extra for us, it's actually embedded into the business. But really what our focus has been on is culture and capability of the team. So not just at sort of the corporate and executive level, right into the team level. And right now we've seen turnover drop 50% over the year. We're sitting at below 20%, which is outstanding for the mining industry. But importantly, we've just got highly capable, high caliber teams on site. And I put the teams against any other teams I've worked with, they're as good as you get in the industry. So while we've been sort of building the business, we've actually been building, everything from the ground up, systems, processes, people, and now we're kind of ready to move into that next phase of growth. So when we talk about the operations and what we're doing, this next chart kind of covers what we've been talking about. So this was the year we had just open pits, and then we started bringing in Riverina as an underground, and we ramped that up over the year. But this was the year we fell a bit short of guidance, so targeting the 100,000, but it was still an outstanding year for what we achieved. And you sort of see Sand King start to come in just at the tail end of the year, and that forms the backbone of kind of what the next year looks like. So it's order of magnitude shift happening in FY26, going from single asset open pits to then single asset underground to dual asset underground. So we hit critical mass. Obviously, cash flows and everything go up, but suddenly the risk of the business starts dropping. We build stockpiles and we get access to upside of 2 major mineralised systems. And the thing to note here, this 3 million tonne per annum plant, so we've got a small high cost plant. So when you're talking sort of 1.1, 1.2 million tonne, the costs sit between 50 and 60 bucks a tonne. So, and that's relatively stock standard. It's hard to get them lower at that scale. When you build a 3 million tonne per annum plant, it actually runs almost the same total spend as what the 1.1, 1.2 million tonne per annum plant. So what that means is you can get a bigger plant operating, but you don't add any operating costs to the business. And then when I talk about what, corporately we don't add any corporate costs to the business. And when you've got site all set up, 2 camps, everything going well, you don't add any admin costs. So if you can bring in bigger infrastructure, this is when you really start right-sizing the business. So you basically are bringing in just mining and just haulage costs as your next phase of growth, and you start getting proper economies of scale. And that's why I talk about 150 being the starting point, because really it's justifying that next phase of growth that is super exciting for us. When you're looking at the operations in isolation, so Riverina sits about 50 kilometres north of the plant. It's pretty stock standard ramp up. It's pretty stock standard narrow vein, but it is quite prolific in terms of the strike length. So we've got stack loads that go, for over 1 kilometre. And that ramp up, like we've seen the development tonnes there and the stoping tonnes contribute, the grades reconciling pretty well. But what we really did last year, which was the exciting part, when we first started Riverina, our deepest hole was this one here. And most of our drilling was about there. So that's all we could afford at the time. This year, as we've got in there, we've got the operations up and going. This is down to 1 kilometre now. So we've proven sort of what we'd call typical Riverina style mineralisation down to 1 kilometre. And that corridor there is about sort of 700, 800 metres of strike, just for scale. So just that piece alone, this has been the surface drilling we've done this year. And now we've got some drill drives coming in to come and just sort of start infilling the gap through there. So Riverina started off as sort of a short life, but when new mineralisation extended, if you mine 80 vertical metres a year, which is pretty good, it'll take 10 years to get down to that point. So we're starting to view Riverina as kind of, just a base source or a source of feed between that 80 to 100,000 ounces, for 7 to 10 years. And the drilling we do this year will start infilling that, pushing it into resource and reserve positions. And then if we go south to Sand King, which is about 40 kilometres southeast of the plant, this is our second mine that we ramped up over the year. So we cut the portal in August last year and got it to steady state, basically sort of in end of June into July. And this is 12 months behind, because when we drilled Sand King, we only sort of focused on this area. But this here is a 5 kilometre system, and it goes over on the other side of that ultramafic through there. But it once again shows our ability. When you think of Riverina, the first drill hole went in, within 12 months we cut the portal, within 12 months we got to steady state, and we got payback within 18 months. The same thing's happening at Sand King, just slightly quicker on the back of a stronger gold price. So our ability to find these mines and turn them on quickly is pretty outstanding. And it also, once again, points to the prospectivity of the belt, because these are only the first two we've drilled. So these aren't the best two, they're just the first two. And it's unlikely they'll be the best two as we go forward. And just with Sand King, our focus has been just getting it up and unpacking it structurally. But the top case here you can see is the FID case, and it really focused on what we call the BD load here. And that's down to about 300 metres, because that's where the drilling capped out. So you fast forward 12 months after we started, this is what it's looking like. So we had a drill drive that put in here to start drilling this area, and you can see that that's extended it as a second decline to the south. And the north, the stuff is starting to extend down as well. So what we're doing over the course of this next year is starting to drill at depth. We're starting to drill laterally, but we're pretty excited about what Sand King can do going forward, and just acknowledging it's very early days and not a lot of drilling in this system. And the other thing, like Riverina, you get stacked loads per level. So it's not just a decline going down and accessing one load, you actually get multiple loads. So this is that BD load I spoke about that covers through there. But what we're seeing is other shear veins and tension veins coming into play that behave pretty well. So we can sit on them and get some good grade. And then we get some really nice grade runs. And these will come out, and as we start sort of opening up these mines, they become drives as well. Same thing happening to the north. So we see those lateral extents increasing, and we actually also see blowout zones where they intersect, and they can cause both grade and volume blowouts. So this is exciting through here, and we're sort of looking forward. We've got 2 underground rigs on here at the moment. By the end of this month we'll have 3, and by the end of the year we'll have 4 underground rigs starting to unlock that, and we'll also have 2 surface rigs starting to pin it at depth. So we start to advance it pretty quick. And now moving on to, I guess, covering operations and getting us to base case. This is really the value driver, and it's why I joined the company, and it's why many others have joined the company, is finally we can deploy resources, and when I say resources, drilling power into these deposits. So what we're going to do is spend nearly drill about 330 kilometres in this next 12 months, spending 73 million. It's almost double the previous 3 years combined. And when you think of what that did in the previous 3 years, it found 2 undergrounds, extended one to 1 kilometre, extended a potential third one down to 400 metres, and got our eye in on a few others. You can kind of see, you get the feel for what 330 kilometres can do, because we're not just sort of walking up to greenfields here, we're walking up to pretty advanced targets, and we're going to get a hell of a lot of data out of them. So the 4 ones we've got really at play, we've obviously got Sand King, which I spoke about, but Little Gem, which is south of Riverina, Wahi, and Round Dam. These are the ones that we're excited about. And between those 4, that'll attract about 80% of the spend, subject to sort of drilling results as we go through the year. So if we look at Little Gem, so this is just south of Riverina. So the section I showed you before was that section through Riverina, but that's sort of 8 kilometres through there. The scale of the fluid flow of this system can't be understated. So we've just drilled it out over 8 kilometres on really wide space drilling, and we didn't replicate sort of high grade, high widths that we saw initially at Little Gem, but what we're seeing is structure and grade on very wide scale. So as a system, as a region, it just says there's a lot to unpack there. But what we're really focusing on now is this Little Gem one. So we got the initial hole here, which we announced early in the year, 22 at 5, and then 40 metres away, 11 at 6.4. So that's pretty exciting. And then we just got this hole here, which is 400 metres to the north, and that was 8.8 at 6.3. So when you zoom up on this, and it still doesn't give it really the credit it deserves, that's 1.6 kilometres through there. But you've got two lodes, this lode here, which is what we're focused on, so the diamond lode and the ruby lode, they're about 40 metres apart. But this hole here is the 22 at 5, and this is the 11 at 6. And we're starting to see that, permeate down to 400 metres. So this window here taps into a 38-hole program that'll cover nearly a kilometre of strike down to about 500 metres. So it's data poor, but the potential is high. So we're super, super excited about what this can be. But yeah, we'll know, we'll have a good idea after this program, which will finish in the next 3 months. So we've got 3 drill rigs on there at the moment. The next target is probably slightly the other end of the scale. A lot more data, but probably less potential than Little Gem, but still look like it'd be a good deposit in its own right. So Wahi, which is right next to the mill, this drilling, you can kind of see highlights how all the drilling has been done in the past, just drilling for cutbacks on the open pits. So it's pretty well understood down to about 200 kilometres, or 200 vertical metres, sorry. And you get these high-grade shoots sort of forming through there. So it's a bit more structurally complex. What we're doing now is just drilling it down here, and we got this grade hit, which is sort of 8.7 at 9.3. That's at 330 metres below surface. But what it's showing is that this system is alive and well. And rather than do open pits, we might do smaller cutbacks, but you can easily put a decline down there and start accessing sort of all the strike there. So we've got a diamond rig and an RC rig on this now, and we're starting to drill it. And the other thing we're looking at is this golden pole through here. That was mined in the 1930s at ounce dirt, and it was quite a small window. So it's got potential to deliver a lot of high grade, but what we're looking for is stacked loads through here as well. So that's another exciting prospect to see how that plays out. And then the other one that we're really starting to unpack is just south of the mill. So that's the mill. This whole round dam trend, when we sort of appointed a couple of geos on this, they did an outstanding job just redoing the entire geological package. And what became apparent is it was fundamentally misunderstood, and that's more of a symptom, I think, of capital and what they're looking for. So because of the small mill, everyone was only looking for high-grade open pits. They weren't trying to drill out these big systems. So when you look at this system that goes for north of 20 kilometres, our focus here is on this 7-kilometre stretch. But you've got a mineralised lode there against sort of a sediment, ultramafic, and then a basalt. And you can kind of see one of the pits actually goes down on this one, and all the drilling stops within 5 metres of that potential main lode. Another of the pits comes down on this one, and then they actually put the ramp in that, and then they try to grab that as well. And then another one sort of bends around and picks up this load, but no one has sort of sat back here and drilled all the loads for big bulk high grade. So we're starting to just on wide space drilling that 7-kilometre trend, but unpacking this could make a material difference, and you do that in parallel with doing the mill upgrade studies to 3 million tonne. You can start to see we're getting potential from all fronts. And then probably the last one to talk about, there's still multiple other trends that we haven't really got into, but we'll start deploying a bit of resources to this year. So Mulline, which is west of Riverina, that's 10 kilometres, 5% of the holes below 100. What is there is, outrageously good. Like when you're seeing sort of ounce dirt, 2 ounce dirt, nearly 8 ounce dirt that just didn't get followed up on that system. That's, littered with old workings from the 1900s. This is going to be one that we're pretty excited about unpacking, but it'll be more of a medium-term thing. We just got to do our drill testing to work that up. So that's what we talk about FY26. So it's actually the start of where we actually wanted to get to. The catalyst coming out of the business now, we can deploy meaningful resources. We're getting meaningful data. Not just production, cash flows growing. It's, getting access to 2 mineralised systems in our 2 undergrounds, getting a study up for the 3 million tonne per annum mill, and then it's really about sort of how do we fill it and what's the best, and getting really good competition for capital in the business. So super excited about what we're doing. It's been a hell of a lot of hard work by the team to get to where we are, but we'll put the business in a really strong position so that the next few years should be a hell of a lot of fun. Thank you.
Thank you very much, Luke. Any questions from the stage or from the floor? Maybe just...
Yeah, so the question was, how's the 73 million going? So 80% will be split between sort of 20% Sand King, 20% Wahi, 20% Little Gem, 20% Round Dam, then 10% on Mulline, then 10% will be tenement maintenance.
Excellent. Thank you, Luke.